Good morning. Merry Christmas, everyone. 8:46 a.m. Pacific Standard Time. The wonderful date is 12/24. Calendar 2011 is coming to an end. And MMTs and our followers worldwide this is going to be a Tuesday, January 17th. That's going to be 2012. Okay, and what is it going to be? Earnings. So here, EARNINS. Hopefully it doesn't change the document. But that's what it's going to be. One of the things that we're predicting in calendar 2012, as we have said over the last 10 quarters of the actual tech cycle and all the various sector cycles of earnings, have plateaued in the current environment. Now, it's the same environment in calendar 2011 that we had said at the top of the year that equity prices would get at their all-time highs, and that was toward the end of 4/18 of 2011, 5/1 of 2011. We had told everybody that there would be a problem with the earnings. They've done extremely well, 15% in the last 3-year period since our 2008 bottoms in our forecast in those years, 9, 10, and 2011. Now we're giving out what we call the earnings predictor, and what we are telling our clients worldwide and our MMT division is that earnings contraction from the original lows in 2008 were a wonderful thing. But we have got top ended up there at about 15% across the board. We feel that earnings have really done in our math. The thing about it is that those earnings are going to have to get marked down by analysts because we're going to have a lower growth environment. And a lower growth in GDP and all of the other kinds of data that gets compiled into these things is that from that original crisis to the current banking crisis, 3 years later, we have taken that stimulus and got those earnings up there. Now with the European contagion and other worldwide markets not doing as well in their banking systems, is that there will be a lower growth environment, that the actual earnings environment, the growth environment, will have to come down and stabilize at a lower level, which is okay. That means that what we would be looking for in the 2012 kickoff on the earnings on the 17th, that's when they really start coming out. Things that we're going to be looking at is that we already know stuff like Oracle. We already know that there have been several semis. There's already been an increase in earning warnings that's coming out and guiding it down. Now, since we've been in that great earnings trough, we had very little of those warnings at all. Never weren't seeing any of them because everything was going well. Now, the key is that at a lower growth rate, there are 4 quarters in a year. Some of those are going to be a little bit lower growth rates, and then there'll be, once again, with certain types of stimuluses that will be injected in 2012, QE3. There are various different things that will help stabilize the earnings, and the only thing that really stabilizes them is marking down the estimates. You mark down the estimates. It's called the biggest trick in the book. Some of the things that we teach our people in our yearly school. You could find out all about those. Some of the ones that we're going to be looking at in this period, Wells Fargo. Okay, we're going to be looking at Forest Labs again for that sector to see what they have. But more importantly, is this Delta Airlines right here. When they do report in the airlines, of course, they're going to report this Christmas season. Merry Christmas, everyone. LLTC. CRE, well, hey, we've been short this name forever. A couple of years ago when they were going to come down, okay? And we've already seen it in some of the tier structures in tech, especially in internet stocks. Goldman Sachs. We're going to be on Goldman Sachs. And, how is Goldman faring today in this environment, this lower earnings environment that they have? And the Goldman Alpha Fund had an extreme, it's been closed down, but the thing about it is, it was about $2 billion in losses. Okay. Northern Trust, we will like to know. One of the things that as we move through this journey, eBay, FFIV, this is a hot one right here with the internet. Now, it's going to be these type of tech companies here, like the FFIVs, these internet, what is eBay doing these days? What we're going to be looking for, USB, US Bank Corp, Xilinx, semiconductor. What is Western Digital doing? But more importantly is, as we move through the journey here, another thing we're going to be looking at is, why are these earnings estimates going to have to come down at Morgan Stanley? And FCX, why is it that China, gold and copper, we're going to be, all eyes are going to be on here, but that environment, that slowdown in China in 2011, that we called for that worldwide slowdown. And now that slowdown is in play, is how is that going to affect? And how is that going to affect the actual earnings? We already know. Estimates have to come down. As the economy slows down in the U.S., we're going to be watching the big blue, IBM. Okay? We're going to see if they're contracting and how much of Europe potentially moving forward in calendar 2012 will be a role player in some of the companies that we're looking at. ISRG, great company. But what we're looking for in the cycle is where the earnings shortfall start. Microsoft will be on that one. And these are going to be some of the leaders in the S&P 100 and 500 that are going to be reporting in the first part of the January week. And it looks like this. And we're going to do our homework, and we're going to find out which is the most overbought stock going into these earnings, and where the earnings are priced to perfection in the current economic environment. And what do I mean by the economic environment? That's how goods and services are going to be sold around the world, import, export, currencies. I mean, I'm not here to talk about the long laundry list that's calculated into them. That's a whole different thing. What we want to look for, MMTs, is what is overvalued relative to those earnings, and then we want to go over here. So if we want to look at a stock that's going to report, we take a stock like, let's say, just to give you an example, let's take a stock that could be overbought. That would be a high flyer. And we could take a stock like, let's take a stock like FFIV, okay? And when we look behind here, and here's the S&P 500, and it can go higher. FFIV, it's going to report. Now it's really great stock, and it's had some challenges in calendar 2011. And we have shorted this, and we have done lots of trades in earnings seasons with FFIV. You could go to the website. One time we shorted it when it was way up here. It got a big haircut. We were involved, and we shorted that in after hours on StockMarketFunding. Just type in FFIV, earnings after hours. It got down here to a great level of $70, where this was a great buying opportunity. But now, within the overall calendar year, we've come all the way back up to the tops, and we're looking at it in a weekly level. Yes, it's got a weekly buy signal. Yes, everything is bullish as far as chart standard technical analysis that one could want. However, is how much, because when we weren't having the problems, when we were over here in this calendar year, you can see that FFIV was already having problems before the worldwide banking crisis even started. And that growth in their sector was already having a change. And I'm using it as an example because I've got to show the ones that we did short in calendar 2011, and this FFIV we did short until we got down at levels that were buyable. And we can currently see that going into the earnings, we're going to go over here, and what we'll be doing is we'll type in FFIV MMTs, and this is part of getting ahead of them. So we know that they report in January. We know where the stock is. You don't want to buy. So we can go back over here and take a look at where the lows were. That was $70. That breakout's right up here at 100, and then we got a nice little one right here at $90. So on this weekly chart, we could go over here and take a look and see what this $90 put is right now in a daily chart. I'll pull up a daily chart right here, and we will look what's below the marketplace right now, and where is this particular contract at. This contract here, remember, it's a 2012 and it's a $90 put below the market. There isn't a lot traded on it because there's not that many contracts traded on it, other than it's going to get in a wholesale price level. And the cheaper that it gets, these are the kinds of trades as we go into the earnings season, is to look and see how we can buy them wholesale. When I go over here to FFIV and you take a look at the volume tree here, you can see there's not a lot of volume on it, on the options, calls, or puts. So another thing that we would be looking at would be a $100 put that goes out in that time frame. And we would take a look at where this one here had more of a high up at $9, but over here the wholesale value is, let's take a look at the low column. The wholesale value is $5. That's how low the contract has been. It's never been lower than that, and that was on 12/20 of 2011. Now, they're not totally deflated because if FFIV continues to rally, and it's too bad that we've already pulled. We were featuring this short a couple of weeks ago, that FFIV had ran back up and tested where this part of the market, right here, right below that 120 down to this $70 handle. So we're going to be watching this one in the earnings season. We'll use this kind of format. What we'll be looking for is where the news is already priced into those earnings, and why buying below the market, way below the market, that when they miss those earnings and the value falls, you make a lot of money. So during calendar 2012, what we are telling people very clearly is, listen, if you don't know how to, if you own stocks, fine. You need to know how to protect them during that earnings season. What we're clearly telling people during this time frame, we're looking at FFIV because on the weekly chart, those earnings are priced to perfection up there in this current 2012 environment that is coming. Yes, there's going to be a lot lower quarters, lower GDP, worldwide transactions, buying our services, or we're selling them our services, let's say, okay? How much money is going to be coming in capital spending in U.S. Sectors, per se? I will tell everyone we'll be doing the IBM trade the same way. Intel's already came out and given a warning. There's been some big companies. Microsoft, we're going to be knowing where that is. We already know, though, we're telling you that the high trough of the 2009 rally to the last quarter of 2011, that we had peaked and we're going to peak in those So it's important that the shortfall of the earnings is when you're growing lower, estimates have to be come down, but you want to get in those trades, MMTs, using the options when they're at their most deflated and cheapest price. So we're going to be covering this. We are telling people that earnings are going to come down. There's going to be a contraction, and that what happened from the 2008 financial crisis up until the calendar year end of 2011, that the quarterly earnings trough had peaked out, was peaking out in 2011, and that you were going to see where earnings would have to come down in 2012 before 2012 was ever going to get upon us. But most importantly is, how do I apply the right trade management, and what is going to be the events, and what is the analyst community going to do when they have to take down the estimates and come to the reality? MMTs, remember, the longer term MMTs, you already know that this was already being told and taught to you last year at this time, what calendar 2012 would look like. And we're saying that 2012, that growth just doesn't disappear. No. What we're saying is a lower growth model that would be sustainable is that the equity prices need to be marked down in a lot of sectors because they're too high priced, and that the S&P 500 earnings are at risk with Europe and contraction around the world. Contractions only last for so long. So this coming quarter and the quarter after, the first half of 2012, as far as the earnings go, there's going to be an extreme amount of volatility. And if the investor doesn't know what they're doing, they can really get themselves hurt, because they have to understand the actual calculated earnings cycle from the original financial crisis to the peak of the 2011. Remember, we're the ones that said that the markets were going down and they were going to go down, but we also said that markets go up as well, but that there was going to be a shortfall in calendar 2011. Go take a look at all the indices and everything we were doing live. StockMarketFunding.com has all of it live before the fact, not after the fact. That's not going to make you money. That's not going to give you the risk management you're looking for. That's not going to give you a solution to the earnings cycle. You need the solution. They're going to come down. And lots of bellwethers are going to guide down. They got to meet the current environment. CEOs, well, maybe they're not quite as pessimistic, but the economy will grow at lower rates at times, and then the economy will come up at times in the higher band. And the thing about it is, from quarter to quarter to quarter to quarter, there are 4 quarters in 2012. There'll be some good quarters, okay? But generally, that will not come until you get into, let's say, 6 months of a contracted earnings growth model around the world. You need 6 months of the calendar 2012 to be able to balance those correctly. But right now, from the current rallies that we've had in the S&P and equities, is we will take the time. We're going to go through the shopping list. We've got all of them. We're going to take out the ones that are the most overbought, that those earnings will not be sustainable, and that the equity price will get marked down accordingly to its earnings date, its after hours earnings analyst questionnaire with the CEO of the companies and all the financials and everything else. It's going to be a telling story. And once again, we're telling people that that story is not what you're led to believe.